Welcome to the UIF Community Podcast. Before we get started, please keep in mind that this podcast is for educational and entertainment purposes only. The views and opinions expressed are those of the individual presenters and do not necessarily reflect UIF Corporation or its affiliates.
Assalamu alaikum. Welcome to the UIF Community Podcast. I'm your host, Omar Subhani. This podcast is about learning, growing, and adding value to your life with topics that are relevant to our community and your career. We also discuss economic and financial news that may be important to your pocketbook and financial well-being. If you're listening to us for the first time and wondering who is UIF, well, UIF is the leader in faith-based financing programs offering home, commercial, and vehicle financing. You can also invest in our financing programs via profit-sharing savings accounts. Learn more about us by visiting our website at www.myuif.com. One quick favor we ask of you, if you like the content and topics, please spread the word by liking us, following us, and sharing our podcast link with your family and friends. Let's get into today's discussion with my awesome co-host, Ijaz Hussain. Ijaz is Executive VP of National Sales and Director at UIF. Myself, Omar Subhani, I'm VP of Sales in the Central Region for our residential financing program. And today, we got a special guest on a little bit later. But Ijaz, you were traveling and going somewhere really special recently. I don't think you won any gold medals on your trip, but you saw some gold medals being won, right? So you can tell us about your trip to Paris for the Olympics.
Hey, salam everyone. Omar, that was a great introduction. Yes, I did not win any gold medals, nor did I try for that matter. But as you alluded to, after the last podcast we recorded, I left for Paris. It was one of those bucket list items to see Olympics live in person. And I was very fortunate that I was able to go to Paris for about a week and take in the sights and sounds of Paris, as well as attend a few events. People when I got back asked me, so how was it? Was it a something that lived up to your expectations? And I kind of had to break it down in like a good and a bad, in the sense that some parts were good and some parts were frustrating, mostly because of me and my poor planning, if you will. So the good, Paris was beautiful. I mean, the Eiffel Tower, I've been to Paris before, but the Eiffel Tower looked incredibly beautiful, the way they had lit it up and the changing of the colors and so forth. I've never seen it more beautiful in my life or in pictures. So Paris was beautiful. The French people did a great job managing transportation, tourists in general, everybody very friendly. Even the police and the security people were guiding people along the way with the smile. And, sometimes you hear French people are not very friendly to Americans. I didn't feel that at all. Stadiums, very accessible. Some events were pretty far, so it was hard to, get out a couple of hours. But in general, a lot of the main events were pretty close to Paris. And public transportation, the train system, the metro system is excellent in Europe, more so in Paris. So that was great. I attended 3 nights of track and field events. The crowd was electric each night, and I went second week, so a lot of the gold medals and the medal ceremonies going on after the final rounds. So I was very fortunate for that because the crowd was just amazing. I even saw the Pakistani gentleman win the javelin gold medal. I didn't even go for that. I was there to see Noah Lyle win the 200 meters. Unfortunately, he came third, but the Pakistani brother actually ended up winning the gold in the javelins, and that was great because there were a lot of Indian people in the crowd, and they were expecting to win the gold. But this Pakistani gentleman won the gold, and the Indian person won the silver. And I don't want to mention their names because I don't want to be off. But it was great. The bad, I felt, was mostly my doing. I had some tickets, but the rest I was going to go and buy over there. That didn't happen. Tickets were sold out, and there was a ticketing app that you could only buy tickets on, and even high-priced tickets that were coming were just going very fast. So why I'm saying this is anybody who's planning on going for the 2028 Olympics in LA, you must plan in advance, buy as many cheaper tickets in advance so you don't have to go there and suffer the plight that I had to go through. So, but all in all, great trip. One caveat, I really miss TV. TV brings so much to your viewing pleasure, the backstories of the athletes, the build up, the hype. You didn't get any of that. Once you're in the stadium, all you see is the actual event. So that was sort of a disappointing to me personally, but net overall, would I do it again? 100%. It was an amazing trip to Paris, and I'm glad I got to do it. So that's pretty much it in a nutshell, Umar.
Yeah, no, that's definitely a bucket list item to go to, such a famous city and have the Olympics there. I am looking forward to. I think we have the World Cup coming up soon here in the U.S. and then the Olympics, right? So we got a lot going on pretty soon. I think World Cup is when is that? In 2 years, right? 2026. So that's going to be. I think they're going to have games all around the country, like Chicago, Dallas, Houston. So in our neighborhoods where we are, I'm in Dallas, Ajaz in Chicago. So I'm looking forward to that, and then definitely would really like to go to LA. I think in the future for the Olympics, Summer Olympics, inshallah. So that would be great. But the two javelin throwers, that was Neeraj Chopra, right? He's
He's
the
the Indian.
Indian
He's the Indian.
javelin.
Yeah,
Yeah, and then Arshad
he won the
Nadeem.
gold. Yeah, he
Yeah,
actually won the gold in the Tokyo Olympics, I believe, in 2021. And
right.
Nadeem Arshad, I believe, is a Pakistani
Yeah,
javelin.
yeah.
He
Arshad Nadeem, yeah, he
silver.
was the Pakistani javelin thrower who won the gold. So great story. I think the two of them grew up kind of almost like brothers, and really, really great story about his background, how he got into the whole javelin throwing, sport, and great. It's awesome that you got to see that like unexpectedly, right? So that's pretty cool experience to see that. In terms of bucket lists and cool experiences in life. So thanks for sharing that, Ijaz. So we also have a lot of economic news coming up. I'm sure you're going to try to share as much as you can right now. So what's going on in the market, Ijaz, that our listeners should be paying attention to?
So, as part of this podcast we do, I try to share, tidbits of economic update with the audience. Many people are either who are our listeners are either looking to buy a home or buy a car. Just in general, get some sense of how we're, from the perch we sit at, watching what's happening in the market, sort of keeping an eye on the data points coming out, including applications, etc. We have a little bit of a view and an opinion, if you will. So the big thing is there's been a real shift in market sentiment over the last month or so, and it's mostly due to the economic reports that have come out. One, you had the July jobs report that came out the first Friday of August, and it wasn't a good report. From all indications, the economy is turning soft. The job numbers were revised downward for previous years. Expectations for the new jobs creation was about 200,000. It came in at 114,000. The unemployment rate ticked up from about 4% ish to 4.3. And then inflation is also sort of trending lower. So it's kind of making the experts question, the markets question, well, what's happening here? I mean, did the Fed, lose the opportunity to cut the rate? Fed had increased rates over 5% and short-term rates over the last couple of years, but they were hoping they can start cutting the rates to not have the economy right into recession. But unfortunately, with this report, market is saying, okay, we may be heading into recession right now. So, and then and the unemployment rate doesn't stop on a dime, right? When it starts moving, it continues to move in a direction, whether it's going down or it's going up. Now that it's starting to go up, more and more people are losing jobs. The question becomes, when is the Fed going to start cutting rates? Most likely, the market is anticipating the first rate cut to come in September, and then maybe one more by the year end, and maybe a few more next year. So the Fed can start slowing down the movement of the unemployment rate, if you will. But the good for our customers are, even though people will lose jobs, which is very sad for those who are losing jobs and so forth. But in general, for people who have jobs but are in the market to buy a home or buy a car or have large credit card debt or whatever, they're going to benefit now, because as the rates go down, a lot of people can refinance. And we already are expecting at UIF a big wave in refinancing coming soon. We'll be able to, take our customers who maybe have a higher mortgage rate down to a lower rate, save some monthly savings. So if you are interested in that, keep an eye, reach out to UIF representatives, and we'll be happy to help you. And So and then also similarly with auto financing, as the rates move down, it'll help people who want to buy cars, and also purchase activity for homes is going to pick up a little bit. I feel as homes become more affordable, with the rates go down, more people can step in and buy homes. Inventory should go up. So all in all, for our industry, this may be a little bit of a good news if the Fed starts cutting rates, but we'll have to see how it goes.
Okay, thank you, Ijaz, for that. And I think going forward, definitely, we have a lot of clients who are keeping eyes on the mortgage rates, who are existing customer of ours, and others, looking to refinance down to a lower rate and save money. So definitely, we'll have our contact information at the end of the podcast. You can reach out to us. I'll be happy to help you going forward on that, inshallah. So, but today we got a special guest, Ijaz. Real estate investor and guru, Farrah Ali. She's joining us today. And Ijaz, I wanted to ask you, why did we want Farrah to come on? What was the reason, kind of the impulse to bring her on today and have her speak with us?
So, Omar, one thing we've talked about, I think even starting the first episode, that we're looking to add value to the community. Whether it's bringing, reviewing great books that can add value to people's lives. With that said, we reviewed Atomic Habits, and then we also did the book Richer, Wiser, Happier about investing. So we're trying to bring books, but also we'll bring interesting speakers from time to time who we believe can help the listeners. I met Farah recently. She's a very entrepreneurial minded woman, has a great story, and I'm going to let her, tell her own story. But she's an author, and the book title was, how I went from 80,000 in debt to becoming a multi-property owner. And a very successful investor. So I felt like, listening to somebody like Farah, and basically understanding her journey and what she did to get to where she's at, I think it would help our own listeners and younger people in general who want to start a career maybe in real estate investing. So that's really the motivation behind her, Omar. And I think audience is in for a treat. And I think everyone will enjoy listening to Farah Ali.
Yeah, definitely. And, we're excited to have her on. We're excited to introduce you to Farrah Ali, a best-selling author and real estate investor. Farrah has transformed her passion for real estate into a thriving career. Her book, Diaries of a Female Real Estate Investor, has received rave reviews on Amazon and other online platforms. She hosts her own podcast as well, called The Farrah Ali Show. Besides being a successful investor, Farrah is a certified life coach and a mom to 2 kids. Without further ado, let me welcome Farrah Ali to our UIF community podcast. Farrah, can you share your life story with us, please?
Yes, thank you so much for having me on the show. So I just want to go into a little bit of a background of kind of where I came from, my childhood, just a little bit, and then kind of go into how I got into real estate. So I was born and raised in Chicago. My parents came here as immigrants. Usually, there was that as a middle class, you don't really, you don't have to live that lifestyle, of going out to fine dining and all that sort of stuff. So just regular lifestyle. And then what happened was, naturally, I'm come from, Indian descent. So as soon as you're around 19, 20 years old, the culture is, okay, well, it's time to look for somebody to get married. So I was going to school at the time, college. I actually ended up not finishing school, and got married. And then once I got married, same kind of thing. Somebody else kind of lays the path for you, right? So it's okay. Once you have a kid, you're married, then you go and you have a child, and then, it just goes from there. So I was kind of just following that. I had a child within the first year of getting married, and then my second one came 2 years after. Well, things started not going so well in the marriage. And what happened was, fast forward to 8 years in the marriage, I was having a lot of trouble, a lot of problems, and one of them being financial. So I was working at the time, and I was basically giving every paycheck away to debt and bills and all of that. So I didn't really have anything for myself. Then came a time where I decided that, I've done whatever I could to try to make this marriage work. And I ended up getting a divorce. And this was back in 2011 when I got the divorce. So now I am raising 2 kids, we had joint custody, but I was solely financially taking care of both kids. I had a full-time W-2 job at the time. It was a pretty decent job. So that was enough for the day-to-day expenses, but I had like no savings. I had like really no money at all. So what I did was, I had to figure out where I was going to live. So I rented a house not too far from where I used to live, and kind of just got up and left one day, when I got separated, and started a brand new life, like on my own with the kids. So that was one of the struggles, that I was going through. And so I was like, okay, what do I do? Like, how do people get wealthy? Like, how do people get rich? Because I wanted to provide for my kids, what 2 parents could provide. And with my ex at the time not giving child support or anything like that, I wasn't able to give them like the vacations and maybe some of the extracurricular activities that kids have. So I was like, all right, what I'm going to do is first I'm going to go back to school, because I remember I never finished my undergrad. So I thought, okay, going back to school is going to help me make all this money. So I go back to school, finish my undergrad. And then from there, I was like, you know what? Let me just go right into my MBA. I have this whole momentum going. And I know that once I get my MBA, I'm going to make a ton of money. So this is kind of what I had programmed in my mind. So I get my MBA. I tell people at work. They're all excited. My boss is like, great. They give me a 15% increase in pay. And then I look at my paycheck 2 weeks later, and it's just like a couple $100 more than what I used to get. So I was like, wait, like, this is not going to work for me, meaning with all the goals that I had for my kids in mind. So now I'm back to square one, trying to figure out, like, how do I become wealthy? Like, how does everybody else do it? So I go back and I do a bunch of research on the internet, and 90% of everything that I read and watched on the internet all had to do towards getting into real estate and owning property. So I ended up then going to a local seminar in Chicago. And basically at that point, I started taking classes, and I started investing in real estate. And I did invested my first property in late 2014. So it's kind of just a backstory of how I started.
So Farah, I mean, wow. I mean, that's the word that comes to my mind. I mean, your story is very raw, very authentic, and really an inspiration to many, I'm sure, including many single moms out there who are probably struggling day to day. So it's a very timely topic, and we're privileged to have you as a guest. But for I wanted to kind of dive into the book. I mean, you wrote a very successful book on investing that Umar identified, Diaries of a Female Real Estate Investor, how you went from being 80,000 in debt into being now an owner of many properties and a substantial financial net worth, if you will. But the question I really had for us is, there are many books written on this topic, right? We all know that. There are multiple books on this topic. There have been podcasts on this topic, and I'm sure we'll share some of that later in the show as well. But what compelled you, I guess, to write this book? What is different about this book, and who are you talking to in this book, really? So just, if you could share some of the thoughts behind what basically turned you into an author, so to speak.
Sure. So I never planned on being an author, just letting you know. So it naturally just happened. And it happened because people would walk up to me, and be mainly women, but men as well. And they're like, hey, like, how did you invest in real estate with no money? Because throughout, while I was working, like I mentioned earlier, I didn't have savings. I didn't have money sitting in the account, like all of that. So how did I do this without money? So that was one reason why I wrote the book. Like, how did I do it without money? The second reason was, how did you do it as a single mom raising 2 kids on their own? Like, how did you find the time to do it? And the motivation. So that was reason number 2. Reason number 3 is, a lot of people are like, how did you do this working a full-time job? So like, just being able to like manage and multitask all of that, like, they were just like, we just really want to know. And I used to give people like answers, but I didn't feel content with my answers, because it wasn't like I could really sit down with somebody for 3 hours and give them an answer. It would just be in passing, and a 5-10 minute conversation wouldn't do justice. So I'm like, you know what, let me put this all into a book. And I actually started writing, but once I got COVID in December, late 2020, early 2021, January. That's kind of when I completed the book and released it in March of 2021. But that was mainly the reason. And with my book, like when I was getting some coaching on how to write a book or what to do, basically most authors, and people may not know this, but most authors don't write their own books. They actually have a ghostwriter, or they may transcribe something like on audio, and then somebody takes it and then writes a book. So for me, like I was like, I need this to be my words, my experience. Like nobody else can write about my own experience. Nobody else can feel what I felt in moments when I was going through some challenges when it came to investing and when it came to my life journey, all of that. So that's why I feel like this is unique and different, is because it's 100% all real. Like you said, all raw. Like there's nothing, nobody else made this up. And it's just really genuine. And I was hoping that maybe there could be a few people out there that may read this book and hopefully they get inspired to do the same. Because when I was starting to retire at the age, retire from corporate America right around then, 21, 2022, it was one of the most amazing feelings to be able to own your own time, because our time has always been given to others, right? And to be able to get away from corporate America and be able to make my own schedule and get up whenever I felt like getting up and doing whenever I felt like doing at whatever time I wanted to, was, after I would say having kids, one of the most amazing feelings. And I want more people to be able to feel that feeling of being able to not be a slave to corporate America.
So, Farah, just to follow up on the book, sometimes I feel like when I maybe give a speech or something sometime at a presentation, I'm like, oh, I should have done this differently, or I should have added this topic. Looking back at the book now, that's been in publication circulation for the last few years, is there anything about the book that you would change? Or you now say maybe I should have added a chapter or edited this, or is there anything comes to your mind to make the book better, if you will?
Actually, no, because like that is how I live my life in general. Like you're talking about the book, but even any experience that I've ever experienced or what I've went through or the choices and decisions that I've made in life, whether it's the divorce, whether it's going back to school or whatever it is, right? I don't have any regrets because it makes me who I am today. And at that time, I try to always make the best decisions that I can make at that time with the best of my ability. And if you always constantly use that, we're not perfect human beings. We're always going to make some sort of mistakes, and mistakes are okay because that's what helps us learn. So when you have that mindset, there's nothing that I would change going back in the future, including how I wrote the book and what I, the content in it. The only thing that I do want to do in the future is write another book, because I do get asked about, when my next book is coming out. But again, like that's just how I live in general.
So, Farah, if you had someone who wanted to kind of follow in your footsteps, what would you advise them in terms of real estate investment?
So if somebody wanted to start, the first thing before even getting real estate education, which is really important to begin with, is actual mindset. I think that is probably like 90% of why people succeed. And that's my own personal journey in my life. So, and I'll give you an example of what I mean by that. The reason why I didn't finish college when I was in my early, like 19, 20, was because A, I got married, but B, because I actually got kicked out of college for having horrible grades. And not because I was dumb, but I believed I was dumb. I thought everybody else was smarter. It wasn't that. It was just that I didn't have focus. I didn't know the trajectory of my life. I didn't know what I wanted to be. I didn't know who I was as a person. So I was just kind of following somebody else's path. And when you follow someone else's path, the motivation isn't there. So I would just basically, kind of ditch classes and hang out with friends, because at that time, that's what I thought was, I'm like, I'll just get married and my husband will support me. That's what I used to think. But when I come down to it, like today, I know it's because what I believed about myself, because I thought I was a dumb person. Now, fast forward to me working in corporate, when my boss started telling me, hey, you're smart, you're doing really well, that would motivate me to do better and better. And I don't blame my parents because they are immigrants and they have like their own culture, but like a lot of parents from my culture, I think it's changing now, but they don't really praise, or they maybe like use reverse, like, oh, this is good, but it's not that great, you could do better. And it was like a different type of psychology that I don't think worked on me. But now today, when my boss was like, you're doing so well. So now I wanted to prove to her how smart I was. And so in a matter of 5 years, I got 5 promotions and became, like high level manager, managing 90 people under me. This is when I was in corporate. And that's when I decided to go back to school, because I was like, you know what, I'm not dumb. And then when I went back to school, I got straight A's. And that's why I think mindset is so important. So when you're going to go into a business or go into real estate investing or whatever it is, you have to have that, you got to let go of fear. Like you can't let other people, I guess I would say, make the calls for you, right? Like let's just say you're going to real estate investing and people are like, oh no, don't do that, that's just a bad decision, so many people have lost money. Well, no, so many people have made money. It's just that people need to get educated and do it the right way in order to make the money. This is not like, somebody, when people do stocks, if you research a company in stocks, then you are likely to do well if you make those decisions. But if you're just doing something based on emotion, then you're not likely to do, well. So it's just like that with anything. So you just have to be prepared. Also, your attitude, like the attitude of, okay, if something doesn't work, are you going to give up or are you going to keep going? That's really important. Relationships are huge. Are you burning relationships just because, of minor things? You always want to be a giver rather than a taker. So all of those play a key component to success in anything in life. So that's mindset. Then after that, I would say is get educated in what you're doing, be around people who are doing what you're doing. And then naturally, I think you have a really good formula, and then taking action, that's key. Of course, like taking action is right after that. So if you're going to do real estate, then you need to go look at properties, whether it's looking at them online and then going physically looking at them and making offers. Eventually, when you make enough offers, there will be something that lands in your lap that hopefully works out for you, and then you can just duplicate that process.
So Farah, I think that's the positive mindset. I think is important. I share similar stories. I'm now done extremely well in life, professionally, financially. But I had a similar beginning where the people around me didn't believe in me, but later on somebody did. And when that happened, it changed my mindset, and I then strive for success. And so you're right on point when you said that, somebody believing in you, words of motivation. And I'm talking to parents right now saying, listen, don't say things in front of your kids like, hey, he's the smart one, but he's okay, blah blah blah, because kids really take that to heart. So always encouraging our own children with that positive mindset really plays a role in their upbringing and their success down the line. Farah, but to dive more deeper in, if a 21-year-old today comes to you and says, Farah, I just need these are very good broad, uh, steps you mentioned here, but nuts and bolts, like how do I get started? Where do I go look for the property? Who do I need to get in touch with, an attorney, a realtor? Is there a target rate of return I should be targeting on a property? Because there are many properties out there, but what's a good property to buy, and who are the people who should be in my corner when I'm looking to buy this first property? So if you can elaborate on that a little bit.
Sure. Before I answer that question, let me just walk through the process of how the investing process works, and then I'll go into that.
Sure.
So what I first do is I set up my searches in the areas that I want to invest in. whatever suburbs, whatever local areas that you're interested in. And then once I set that up and as properties are coming, I'll make offers. So once I make an offer, and let's just say it gets accepted, it's under contract. Once it gets under contract, you want to send that to your attorney right away. So you should always have an attorney on hand. Make sure that the attorney is somebody that's has experience in real estate investing. That's really, really important. So once you have that under contract, then, you have to figure out funding. At that point, for me personally, I've had family and friends who have initially funded my deals short term. So what I mean by that is they will give me the purchase price of the home and the rehab of the home. And I would always share with them a template of, okay, this is what the property will be worth once the rehab is done. And then from that point, so once I close on the property and I have the funding ready to go from private money lenders or from family and friends or whatever the case is, there's a lot of sources out there that you can get funding from. Whether it's profit sharing with them or whatever the case is. Then once you close on the property, you start the rehab process. So I always buy properties that are distressed or outdated, because the reason for that is you get them at a discount. When you're buying something retail, there's no discount there, so there's no potential to gain much equity at all. If I buy something at a discount at the right price and then I fix it up, let's just say I buy something for $100,000 and I spend $40,000 fixing it up, that's $140,000. In that scenario, that very same property, once I fix it up, will probably appraise for between $180,000 to $200,000. So that right there in itself is equity that is built in. So that's the first thing. So once I get that property rehabbed, right away, I'll get a tenant in the property. And once I get the tenant in the property, then I will refinance that property for a long-term loan. And then with that long-term loan, the funds that I initially used to borrow short-term gets paid back to whoever I borrowed that from. So they're done. Their profit is made at that point. And then now I have a loan, a 30-year loan, and always the case is that the mortgage, the principal, interest, and all that, or not what we call interest, but whatever, you can get halal loans, however that works for whoever, everyone has different thoughts on that. But in that scenario, let's just say your payment is, I'm just making up a number, $1,600 a month. In that same scenario, I would get $2,000 to $2,100, maybe even a little bit more of rent. So after all expenses, I'm netting approximately on average $500 a month net cash flow. So not only do I have $40,000 to $60,000 in equity that I just got, but now I also have $500 net cash flow coming in every single month. So that is the process of doing one deal. And so from that point, once you do one, you just duplicate that process over and over and over and over again. And, alhamdulillah, like I'm able to now I own between 50 to 60 properties. So you can just take that 500 times that by, 50 properties, let's just say. And that is the net cash flow that's coming in every single month. And then on the other side, I still have all this equity that I have built in all these 50 properties. So that's where my net worth has been accumulating. And then my net cash flow is what I have, and I was able to retire from corporate because I have that income coming in. But as far as your question of what people need, and if I was to tell a 21-year-old, is let's just say, depending on if they're done with college or not, and that's also a touchy subject. Some people are like, go to college for stability. There's no right or wrong answer. I think it's a personal choice. But let's just say that they're particularly going into their investing career. It's having the right team that is really, really important. You want to make sure that you have a good attorney. You want to make sure that you have good contractors. You want to make sure that you have someone or some people around you that are educating you, some people that you can bounce ideas off of, somebody to check to make sure that it's a good deal, like a mentor. You need a if you have a bunch of properties, a good property manager to manage on the back end. I actually managed my own properties, and for the first 40 properties, I didn't even have a property manager. I did my own until once I hit 40, I was like, okay, I think it's time for me to get a property manager. It's becoming too much for me. So, like
after 40 properties.
Yeah, after 40. And I was still working full time too.
Wow.
Yeah. But I can talk a little bit about that, why I managed the 40 in a little bit. But yeah, that's basically it. So you like having the right team is really important, because then you can start delegating. Like the first 8 properties that I did, I was my own GC, and I did it intentionally because I wanted to learn. So I was out there going to the properties, making sure that the electrician was doing their job, the plumber was doing their job, that things were going accordingly, that I was picking out some of the major things like the flooring and the cabinets and the countertops, all of that. So I could educate myself, because there's one thing when you get educated by watching videos and reading a book, but there's another type of education when you're actually experiencing it. So after the first 8, when I felt like, okay, now I know what I'm doing. Now, if somebody else were to come to me and be like, hey, this rehab cost $80,000, but I know because I have experience that it's more like $60,000, I can go back to that person and be like, hey, where's the $20,000 difference? Because I think that this rehab is $60,000. So that's really important. Then once I did that, then I started getting a GC and I started delegating everything out, because now I started focusing on acquisitions, because that is where my time should be spent. On acquiring more and more properties. And that's how I was able to scale up after that, was all in acquisitions, just going out there, looking at properties and getting them under contract. And then from that point, my team took over.
So for the type of properties you focus on right now, and again, maybe, I don't know, I'm sure markets change. So sometimes better deals on single family homes versus multi-unit, etc. Is there a particular sweet spot that you focus on, the type of property you want to buy? Are you looking at, and also I'm going to tie this with the other question that I was going to ask you, is about the location. So you can maybe combine them both if you want. I know some locations are A-rated locations, they're prime properties, if you will, and others may not necessarily be A, maybe considered B. I'm just making up these letters, but somewhere where it might require more work, more, the type of community living in there is more working class, if you will. So between the location and the type of property, do you have a sweet spot that you focus on? Or?
Yeah, I do. So when I was first investing, I was open to pretty much any area except for like deep pockets. So let's just say A is your affluent, B is your bread and butter, C is in kind of like challenging, D is like don't go there. So I would definitely stay away from D. Like I would not go to high crime areas at all. That's not what I wanted my portfolio to be.
Well, as a single mom, you also don't want to risk your life trying to make money. So I totally get it. So.
Yeah, exactly. Now that might work for some people, but there's every category has there's a sweet spot for everybody there. But for me personally, I was A, B, and C. Now I didn't do A to start off with because the price points in A is a little bit higher. So I was like, let me go to properties where I can buy them for anywhere between $60,000 to $130,000-$40,000. So those were generally in B and C markets. So I started investing there first, and I accumulated, most of them are in B markets. I accumulated about 20 to 25 in B plus markets. And then I had a portfolio of like 6 properties that were in a C plus area. So the deal was so great that I took that portfolio on, and that was in a C plus area. The neighborhood was like, I do pay attention to the streets. So even if something's in the C area, but if that street is like all nicely manicured lawns, people look like they take care of that area, then I'm open to it, because generally you have decent tenants in that area. But yeah, so that's like my sweet spot. But recently, once I gained experience and once I was able to have a little bit more capital just in case if something goes sideways, because appraisals don't always come in or rehabs don't always go in exactly how you think. So you have to have a little bit of funds or capital as you're growing and scaling up. So once I had that, then I started going more into A areas, especially because I started doing Airbnb short-term rentals. Over the past 2 years, I've done about 12 Airbnb slash short-term rentals. So those are very lucrative if you do them in the right areas and you have somebody that can manage them well. But yeah, now I've moved into more A areas and AB areas. But definitely as a starting point, there's nothing. I mean, my very first property that I did is in a small suburb called Lyons in Chicago. It's a B plus suburb, B plus suburb, and I still to this day have the same tenant there that rented out in 2014.
And the type of properties you focus on, is it more just condos or single family homes? Or
They're all single family homes. I do have a couple that are multi-units, but I particularly like single family homes because I think the ROIs are better on that. The cash on cash returns are better. A lot of times in these single family properties, I have no money invested in the deal because they're priced so high that the bank gave me a loan that was more than what I owed to the person that I borrowed the money from temporarily. So I was able to sometimes even pocket some money and but definitely single family homes also, because if you compare tenants with single family homes versus multi-unit, let's just say, units that have 10, 20, 30 apartments or whatever it is, the turnover rate is a lot more in apartments because people in apartments are always looking and moving to other apartments, or maybe they're going to a single family home because that's their final destination. Whereas in a single family home, that's something that they are looking to stay long term. And so when there's less turnover, that's very profitable because now you're not sitting there 2-3 months trying to get something to rent. So all those factors, plus you have families that live in single family homes. So there's less problems when there's families, with kids going to school and all of that sort of stuff. With apartments, sometimes you're dealing with people that don't have as much. So there's more stability with single family homes. That's why I gave you that example. Actually, my first 2 tenants are still the same tenants that I had almost 10 years ago.
Farrah, where should people look for good deals? Like, are they supposed? I mean, I can't assume that you're going on Zillow, right? So, are you talking to private parties, MLS listing, sheriff sales? Like, where do you recommend?
So the majority, I would say 60% of all the properties that I have are public on MLS. I was just able to, I set up my searches. So you have to set up your searches correctly. And then once they pop on your phone, you have to be able to act quickly to be able to get that deal, so that's number one. I've also recommend looking for local wholesalers in the area. So there are companies and people who are constantly marketing to sellers who are in foreclosure or probates. Maybe they're, their parents passed away and they're heirs to a property. And a lot of times these heirs don't want anything to do with the property because the parents had, a bunch of things, old things. They don't want to clean it up, whatever the case is, right? So probates, pre-foreclosure. So these wholesalers, these people that go and market to these people, they get the property under contract at a very good price usually. And then what they do is they don't take it any further, meaning they don't rent it out, they don't do anything to the property. They actually wholesale it to an investor. So they may add 5,000 or 10,000, whatever makes sense to them. So let's just say somebody got something under contract for 100,000. They will sell that contract to me for 110. So at closing, when I close the property, they get their $10,000 wholesale fee. So that's, getting to know your local wholesalers. So going to local real estate conferences and meetups is where you can find them. Facebook groups as well, real estate Facebook groups out there that have people that are constantly posting their wholesale deals. And then also agents. So agents in your area, maybe you have family and friends who are agents, or even just in your local area that you can go up to and say, hey, I'm an investor. I'm looking for distressed properties. Here's my buy box. What I mean by buy box is here's the areas that I'm looking in. Here's around the purchase prices that I'm looking in. And from there, you just let that agent know. And so then the agent has you on mind. So if the property does come up, they'll contact you. And a lot of times they'll actually contact you before even listing it, because some sellers are okay doing a private sale. So the agent might be like, hey, I have a couple investors that are interested, before even putting it on the market. Are you okay if I run it past them? And I've had that happen to me several times where I was able to pick up a deal without it going on to the MLS. So just building that relationship with wholesalers and agents, and then the MLS, as well as talk to other investors. Like sometimes if I have too many deals going on and I can't do a deal, I'll just hand it to somebody else that I know that's a friend or something that's investing, and be like, hey, I can't do this because I have too much on my plate. Do you want this property? So those are basically the ways that I acquire.
So Farah, Umar and I were talking about the financing options. I know you mentioned that initially you started off basically relying on some family and friends to help you with the initial capital, and you can make an aggressive offer, a cash offer, to buy the property. And once you bought it, you rehabbed it, you fixed it, and then you can put a tenant in there, and then work out some arrangement with your family members to however you paid them back, profit sharing, etc. And Umar, Umar is very good. He deals with a lot of customers and clients and manages a big team for us here. So with us being a faith-based company, to me, real estate and financing kind of goes hand in hand, right? Like most people don't use their own capital to pay cash, so most of them don't have the money, so they rely on companies like us, UIF, to finance their properties. We're basically more of our primary bread and butter product obviously is primary homes, but we have a very healthy, robust investment financing division as well, and we use them, but we can't do it in sort of a regular loan structure because we're trying to avoid interest-based transactions, so we do it in a partnership structure. But Umar, can you dive in a little bit and talk about UIF's investment financing program that we have? But just some of the bullets, if you will, for
Sure, it does.
Can
Yeah, absolutely. So, for UIF investing options, we can do 1 to 4 units. We also have a commercial financing division, but I won't get into that too much. But typically we're looking minimum requirements of 20% down. There can't be any gift funds. Funds have to be seasoned in the bank account. And generally rates are higher. Our profit rates that we charge than what you would get typically for a primary home. So those are kind of the basic guidelines that we're looking at when it comes to investment financing. But we have a lot of customers who use us for investment property financing and have been longtime customers, financing multiple homes, year after year, similar to what Farrah is doing, except they're using our faith-based financing to assist them in that.
Yeah, no, that's great. Farah, a quick question about tenants. I'm a lazy passive investor. Farah, I bought my first property, and that was it basically. And we when we moved from a townhouse to a single family home, we first got married many years ago. I rented that out, and then I just couldn't deal with the tenants anymore. It was just one of those frustration moments for me, and I decided, I'm not cut out to be a real estate investor that does require work, hand holding, and so I was out basically. My career in real estate investing was very short lived. I'm more of the stock market investor, if you will. So talking about that, dealing with tenants. Screening process, and if they get into trouble, can't make payments, etc. What are some measures you use to work with them?
So I do use I have a property manager that manages my properties. It's actually somebody that I personally know, and rather than giving it to some big company, they help me manage all of those on the side. But I personally don't have to deal with them because they deal with that stuff. But when I did deal with them, I made sure that I did a proper background check to begin with. And there's things to pay attention to and red flags that to pay attention to. So what I would ask for is I would obviously run their credit score and check to see what's on that credit report, because it's not just about the score. Sometimes there's a low score because somebody doesn't have much credit experience. So you really have to look at the credit report. If somebody's credit is, let's just say, obviously 720 and better is great, but in some of these B and C markets, they're not going to have 720 credit scores. Otherwise, they would have just purchased a house. So you have to be open to that. So you look at the credit score, and then let's just say they had a bad history, maybe 5 years ago or 4 years ago, they went through some difficult times and they weren't making payments. But for the last 3 years, you look and they've always been making payments for all of their credit cards and their mortgage payments or sorry, their rent or whatever it is. Then to me, that's like, I'm open to taking that risk. So you do have to look at the credit report. I always ask for bank statements as well, because I'm looking to see if was their rent being paid from their bank account? Because sometimes these tenants will give you receipts that look like they're handmade, and that's not good enough. You want to make sure that they've been paying their previous landlord. You do call the previous landlord, making sure that you do a reference check there. Also, I ask for their pay stubs and make sure that everything makes sense. What they put on their application aligns with the proof that they submit. So that's step number 1. Step number 2 is, I've told my property manager this, and this is something that I used to do too, is pay attention to their communication, the process. Like, are they taking forever to get one document back to you? If they're coming in their car, like, is the car, if you're able to kind of peek inside, is it a complete mess? Or is it pretty clean? Because those are things that people then carry to your home, right? Because not only is it about somebody paying you rent on time, but it's also about if they're going to take care of the property. And then, so I pay attention to all those. And then once we go through that process, and if everything checks out, then we go ahead and accept them. And then if someone is missing their first month's rent, or early on they're showing you signs, then you got to be on top of that and keep that finger on the pulse. If after 30 days or so that they're not paying you, or even after the first 5 days, it just depends on your personal preference. You send them a 5-day notice, and then from there you go, you take the proper steps for an eviction. So far, I've had to evict, in my investing career of 10 years, I've had to evict 3 people. So to me, that's not as bad. I think the due diligence on the front part works. I also think it's a landlord's responsibility to do their part. So if a tenant is calling you and asking to fix something, they're actually calling because they care about your property. They want that thing fixed. So it is our job as a landlord to go and to be able to, take care of that. Because if you show them that you care about your own property, they will take care of your property as well. But if you're a slumlord, they won't take care of it, because they're like, oh, they don't care, so why should I care? So all of these things kind of help in being able to manage and scale up the business. When I talked about earlier about managing 40 properties initially on my own, when you think about it, now with technology, payments are made via ACH or Zelle. So it's not like you physically have to go and pick up rent like you used to, 20, 30 years ago. So there's no time invested there. I have a team of handymen, of contractors, of electricians and plumbers. So if anything does happen, all I used to do is take the screenshot of what the tenant sent me and forward it right over to them, to my electrician. Let's just say if there's an electrical issue, they're the ones who's going out to the property. They're assessing the issue. They're sending me a text back and saying, hey, this is the issue. It's going to be $140. All I'm saying is yes or no at that point. And then they take care of it. They send me pictures, the tenant confirms, and then all I'm doing is selling them their payment. So everything is done from my phone. So why would I pay somebody 8 to 10% for literally minutes of work a month for one property? And when you first rehab a home, and when you completely first rehab it, there's less likely to have any issues. The issues come later, like 5 or 10 years later, because everything is so pretty much, new. So that's why I made that decision, because I was literally spending maybe 2-3 hours a month max on property management at the time. So yeah, it's just about, taking the proper steps. And once, if you do that, it's not really that bad at all.
So, Farah, one question I have is you have multiple properties. I'm assuming you don't own them all in your name personally for liability reasons. So, have you created some sort of an LLC or a company of type or corporation to have this for liability reasons?
Yes. So I have LLCs, and LLCs are protected, properties are protected, against, whatever lawsuits or whatever it is. But what I personally do is I don't have an LLC for property because that would be way too many LLCs to manage. So what I personally do is I'll put in about 5 to 6 properties per LLC. So it's usually about a million to 1.5 million in assets per LLC, just to spread that out.
Got it. Got it. I know in the interest of time, we'll wrap this up soon. So, uh, one of the things Omar and I wanted to curious about it was I'm sure you have many successful stories. Can you maybe talk about one successful story that maybe you can say was the most successful investment you made, and maybe one that was a nightmare challenge? So do you want to quickly talk about something along those lines, Farah?
Yes, sure. So, my most successful, I've had a lot of successful, I can't really compare, but I'll just talk about my most emotional. With success is my first property. Like that to me has a special place in my heart because the numbers over there, I bought it for 75,000. I put about $20,000 into it. So like, and then, let's just say there's like other costs, like holding costs, utilities, financing, whatever that is. So let's just say that it was $100,000 of cost. That property appraised for 145, months later. And today that property is worth over 250. And so, it was a home run deal. I had, didn't have to worry about having funds stuck in the deal. My cash on cash return is really infinity because there's no cash to be invested. So that to me was like, I would say my favorite, my first deal, very near and dear to my heart because it made me believe that this is possible. And then I would say like one of my most challenging deals was, sometimes you start like gaining confidence and then you become a little overconfident and then you think you could take anything on. So there was this very challenging project that I took on and I knew was challenging. But I'm like, you know what, I'm going to, make it work. I'm going to figure it out because I'm that smart, so I was a little bit like being dumb, but at that time I could afford to make mistakes. So there's this town in Chicago and it's called Bellwood. And this town here, the village is super strict with certain things. And I did a 2-unit. It was like a 2-flat. It was like in horrible condition. So I had to redo everything. And in that scenario, what I did was I added extra bathrooms and stuff like that. And I didn't know that I had to add another, like I had a bigger pipe for a water line. So the village came in and told me that I need to replace the water line because I was having extra bathrooms. So that was an added, like $15,000 cost. And it was just like a nightmare project from a rehab perspective. I ended up my intention was to just to flip it, not hold it because I didn't want to hold in that area. But I ended up that project took me like a year and 2 months to finish with all these headaches. And I ended up only profiting I think like $12,000 or $13,000, which I didn't lose money. I made money, but I could have that year and a half, I probably could have made, 20 times that amount with the time and energy that I spent with it. So it was just really difficult to deal with the village. It was a very difficult project to work with. So the moral of the story is don't become overconfident.
Sure. Farah, I just have one last question. I'm going to hand it back to Omar to sort of wrap up. But the question I have for you is, I'm a avid book reader and podcast, so I've listened to many, including Bigger Pockets and so forth. Do you have, besides your book that we recommend because it's got some great reviews, is there a particular book that inspired you in real estate, and maybe a podcast that you recommend listening to on the real estate side so people can sort of enhance their knowledge a little bit more?
Yeah, so I would say the book that I read was Rich Dad Poor Dad. That was the initial book. Yeah. And why I liked that book was it got me into the mindset of an investor. And really, other real estate books, they teach you how, they may teach you the process and stuff, but that initially got me to the right mindset. And I don't know, something clicked in my mind with that. So that I highly recommend
It's
that book.
It's a very well written book. Where I read this book many years ago. I'm not a fan of the author anymore because I think he's gone a little loopy.
Yeah.
But putting the author aside, now, but when I read the book initially, just as you mentioned, I was smiling when you said that name, because The Rich Dad Poor Dad, I think, is an excellent book, written very plain words. People can really connect with that book. So I'm glad you brought it up. Any on the podcast side? Is there any particular podcast? I'm not sure if you listen to any podcast that the real estate side.
Yeah, sure. So, podcast wise, my mentor, who I personally learned from, his name is Andrew Holmes. He's local to Chicago. He's got a podcast, so he goes through like different guests, and they talk about different aspects of real estate. So that's if you're local to Chicago, maybe even if you're not local, you can take any of those.
What is that called?
His name is Andrew Holmes.
Okay.
So it's like, cash flow. I think it's called cash flow. I can send you the link to that.
Sure.
But yeah, that's a good one for locally to Chicago, or even if you're out of Chicago, it doesn't matter. Like the concepts apply. So that's one that would be good. And he also does, like my mentor, he teaches as well. Locally. So if anybody wants to learn real estate, that's definitely one place to go. There's other resources as well that I can definitely share.
Okay, great. So Farrah, before we wrap up, just wanted to ask you about your life coaching program that you offer. Can you tell us a little bit about that?
Yes, absolutely. So, I got certified, got a master practitioner, so that I did recently last year. But there's two types of coaching that I do. One is called a breakthrough session. So, a breakthrough session is when I sit with somebody for, it could take anywhere between 5 and 8 hours, just depending on how much work somebody has, like inner work that needed to be done. But what happens is, a lot of times, all of us, from the time that we're born, and even probably while we're in the womb, because everything affects us, till today, whatever you heard, whatever someone put into your teachers, your parents, whatever, it goes into our minds and it goes into our subconscious, and it becomes like a program. So like all this data is put into in our brains, and a lot of the things that we do in life is because of the programming behind the scenes that happens in the subconscious mind. So for example, let's just say you were raised with a limiting belief that there's not enough money. So what happens is, anything that you do in life, it comes from that place that there's not enough. So your actions are based on that. So you can usually see that a lot of times people that have limited thinking when it comes to money, they don't have a lot of, they're not living in abundance. So what I do is, whatever limiting beliefs you have, whether that's fear, there's guilt, there's shame, there's sadness, there's anger, any of those negative emotions, any of the limiting beliefs, any of the inner conflict, I'm able to, in that 6 to 8 hour session, able to coach them out of it and kind of help themselves getting rid of all those blocks and negative emotions and beliefs that they have attributed, clearing the subconscious so that they can now move forward in any area of their life, whether it's relationships, whether it's personal development, so usually a session helps in different aspects of their life. So that's one thing that I do. The other thing is business coaching, or even personal development coaching. So let's just say somebody has a goal that they want to achieve. So what I'll do is, I'll take that goal that they want to achieve, I'll break it down into bite-sized pieces, and we will work through it. I get on the call with them, once a week, make sure that they've done the tasks that they were supposed to do, then come up with new tasks to eventually be able to reach their goal. And in the process, if there's any sort of blocks or anything that I notice, then I will help them through that as well. So those are kind of the two things that I do. And a lot of people, what they do is they combine both. They do the breakthrough and the coaching together, because that really goes hand in hand really well.
Oh, that's awesome. Thank you for sharing that, Farrah. Where can our listeners reach you?
So they can go on my website, farrahali.com. And on the website, they can just put their information in, and the email then will just go into directly, and then we can schedule a call if anybody needs, like a discovery call. If they need more information, you can email them back, schedule a call, either way.
So Farrah, I want to first and foremost, just say it's Farrah with the F-A 2 R's. I confused in the beginning with 1 R, so it's Farrah and Ali. So that's how her first name is pronounced and spelled out. Farrah, I want to say thank you so much for coming on our podcast today. It's been a great education for me, and I'm sure for all our listeners, and from the entire UIF team. I wanted to say thank you so much, and I'm sure maybe down the road we might invite you back for a 2.0 version of this, maybe with some specific ideas and thoughts. But just gratitude that you spent some time with us. Umar, I'll let you do the wrap up, and again, thank you so much, Farrah.
Sure. And I just wanted to mention real quick, I do have social media as well, Facebook, Instagram, so anyone can reach out to me. And if anybody wants to learn real estate investing and scale up their portfolio, just reach out to me via any of the social media platforms or the website, and I can direct them into the right place.
Fantastic. Thank you, Farrah, for coming on. Really, really appreciate it.
Yeah, thanks for having me.
Well, that's a wrap for today. Thank you for tuning into our show. We sincerely hope that what you heard today benefited you. Also, keep UIF in mind for your Islamic financing needs, whether you are looking for home, commercial, or auto financing. Additionally, UIF now offers halal savings accounts, so please check out our website at www.myuif.com to learn more about our halal financing options. Until next time, this is Umar Subhani signing off. Take care, everyone.